Hello, hello. We are now live. And Diana, I can hear myself a little bit on yours. So if you could turn down your thing, I'm getting a little bit of feedback there just until I finish the intro. So, hi guys. Jamie here. We are live right now on my YouTube channel, Jamie Trull. Subscribe if you're watching me there. We are live in Financial Literacy for Women Business Owners, my Facebook group. If you're not in it, definitely come on over and join us. Lots of fun conversations happening in that community and live on my business page as well. So wherever you're watching us from, say hey, tell us you're here. Tell us where you're watching us from. Sorry, we're a little bit late this morning. We tested everything. Everything was working. And then all of a sudden my sound completely shut down and I had to switch computers. So go figure, a day in the life of an online entrepreneur. Okay, so I see we have people joining. So tell us you're here. Tell us you can hear us because we were having some sound issues, or I was having some sound issues. So tell us you can hear us. Today, I'm really excited to have one of my preferred vendors on the line. So we've got Diana Gleason from CubePros who is here. And we're going to be talking about specifically closing out your books for 2020. Because I know, like, we are first week of January here, and all of a sudden, everybody just realized that they have to get their books done. And we're going to talk a little bit about what the optimal timing for that is. It might be sooner than you think it is to get all of this done. And we're going to give you an exact rundown of exactly what you need to do. Because I think that's the other thing that we run into is, okay, what in the world am I supposed to do at the end of the year with my books? So that's where Diana is going to be able to come in and tell us exactly what you're going to be able to do. So hi, Emily. Hi, Athena. Hi, Lisa. Hi, Rolanda. Hi, Sarah. Hi, Jennifer. Okay, we got lots of people on the line. Yay. So first of all, I want to give Diana the chance to introduce herself to our community. Now, Diana has been with us before, and you guys probably have seen her a lot in the group as well, because she's in there giving a lot of value. But it's been a little while since you've been on a live with me, Diana. I think the group has changed a little bit in that amount of time. It's grown just a tad amount. So I want to make sure that everybody gets a chance to know who Diana is, know who CubePros is, and also I've linked my preferred vendor list above, which Diana is one of my esteemed preferred vendors. So I'm going to turn it over to you, Diana, to introduce yourself.
Awesome. Hi, everybody. I am so excited to be here. My name is Diana Gleason. I haven't been live in the group in almost a year, I think. But I have been here in a preferred vendor the whole time. I have several clients in this group, and they are some of my favorite clients to work with, I have to tell you. So I am a former professional dancer turned bookkeeper. I'm a wife and mom of twin 5-year-old boys, so I'm busy. And I have been with CubePros. We are a remote bookkeeping company, really across the country. We're a team of 8, and we have people everywhere. And I personally am based just outside of Philadelphia. So I'm just really excited to be here, talk to you guys about closing out 2020, what that looks like.
Yeah, it's a very natural progression, right? From professional dancer to bookkeeper. I forget it every time, and then I talk to you and I'm like, oh yeah, she was a dancer, right? A little bit of, the left brain, right brain.
Yeah. That, like, if I wasn't, I've studied professional dance in college. I have a Bachelor of Fine Arts. But math was always my other thing. Like, if I wasn't going to dance, it was going to be math. And so bed rest with twins made a pivot in my life.
Yeah. Pivot is like the word of 2020, I feel like. And you pivoted before it was cool.
Yeah.
Right. Okay. So let's start off by talking about sort of the steps to close out and what that means. Because I think sometimes, we say we have to close out our books, right? People might say, okay, does that just mean categorizing my transactions? Like, what exactly does that mean? So just taking it back, firstly, when we talk about your books, for anybody, most people probably know what that means, but basically that is essentially your books and records. That's what that sort of is short for. It's your books and records in your business, which typically will at least be a profit and loss statement, a P&L, which shows your income and expenses. You may also have a balance sheet as well. It's a good thing to have. But closing out is kind of part of the process of finalizing those books and records. So let's talk about what that really means, right? Which is probably a little bit different than what we think that means.
So when we say closing your books, like Jamie was saying, we want to make sure that all of the pieces of information from a certain time period, so we're looking at 2020, are all accounted for and accurate so that we can provide those statements like a profit and loss report or a balance sheet, right? So we want to make sure that we've gathered everything from every source, accounted for it, make sure that it's accurate before we go and file our taxes. So that's sort of, right, in layman's terms, what closing your books means.
Yes, exactly. So it's not just necessarily going in. Yes, of course, you want to have expenses categorized and all of that kind of thing, but it's a bigger exercise than that. And there are things that we should be doing. And I'm sure Diana's going to get into this. I'm going to let you talk through. All right, let's go through the list because you sent me a list of all the things, that it means. So you guys get your pencil and paper out because I want you to start writing this down. And if at any point during this you start to have a mild panic attack, okay, find yourself a bookkeeper. I might know somebody. I might know a few somebodies. So that for me is usually if this is kind of putting you into a conniption fit and you realize in the middle of this that, oh my goodness, this is a lot of work. That is where it is so beneficial to have somebody who can help you through this. But I'm going to let Diana take us through the list.
Yeah. Okay. So if you have accounting software like QuickBooks Online, you want to record all of your income and expenses into your accounting software. If you don't have accounting software, which I strongly suggest that you do, but if you don't and you're using something like Excel just to keep like a basic spreadsheet of income and expenses, then we want to make sure that you've recorded everything into the place where you put things, right? So that's number one. And you want to make sure you're doing this for every account you have associated with your business. So if that's your checking account, your savings account, a credit card, PayPal, etc. Okay, so any account that has to do with your business, record the income and the expenses. The next thing you're going to do is reconcile each account. What does that mean? What does a reconciliation mean? Reconciliation means we want to make sure what actually happened in the bank or on the card also happened in your accounting software like QuickBooks or in your Excel sheet, right? So you want to pull your bank statements from every month. If you haven't done it already, you need to go back from January and compare and make sure every month is clean, that what happened in your accounting software happened in the bank, right? Yeah. So that there's no discrepancy. I, as a bookkeeper, perform reconciliations every month for my clients, and I can't tell you how many times, number one, I find money for people. And I'll say, hey, when I reconciled this, actually, you have an extra $500 from so-and-so that's not yours, which is good. Or, hey, you overpaid this, or this vendor charged you twice. We need to contact them and get your money back. And that's sort of the benefit to doing a reconciliation, is because sometimes when you have a lot of workflow going on, those things slip through and you don't even realize that you've overpaid or underpaid, etc. Okay. The other accounts you want to look at are any type of asset or liability accounts. Like I mentioned, PayPal, Shopify, if applicable, any type of sales platform that you're using. You want to make sure what happened in there happened in your accounting software. We want to make sure that they, okay. From there, we want to account for any loans or lines of credit. Why? Because you pay interest on those. And the interest that you pay is tax deductible. So we want to make sure that we split out your payments. A lot of people just record that one payment, say it was $115 a month to whichever loan, but actually $22 of that was interest you paid every month, and over 12 months, right? It makes a little pile of money that we want to use as our tax deduction. So it's important to look at your loans and your lines of credit and split out your interest and know what you paid.
And I will say that loans are one of those things I feel like that is most often to be recorded wrong, because people just let it kind of flow through. Sometimes they even record the whole thing as an expense or something like that. So I think that loan payments and even incoming loans. So real quick, because some of you guys got PPP loans and EIDL loans, I'm going to derail for a second just because that reminded me of a question we keep getting. So for those of you guys who have, say, EIDL loans, right, that should be sitting on your balance sheet. That income, you should not be recording that as income in 2020. You do not want to pay taxes on a loan. It's not a good idea. But sometimes when we're doing our own bookkeeping, it might somehow get picked up as income. You do not want that. It is not taxable as income. That goes as a liability on your balance sheet. And as you pay it, comes off your balance sheet. But as Diana just said, a portion of those payments that's related to interest, that you can actually take as an expense, as a tax deductible write-off on in your business. So that's why it also is so important to make sure loans are done correctly, because they can be a little bit confusing. PPP, just to touch on it, PPP, if it has not been forgiven, that's going to be sitting as a liability on your balance sheets. If it has been forgiven, right, that is then going to be recorded as, call it maybe other non-taxable income, something probably in its own account, right? Wouldn't you recommend, Diana, on the P&L so that your bookkeeper, your tax preparer knows exactly what it is and doesn't accidentally call that taxable income to you? Because again, we don't want to be taxed on things we don't need to be taxed on.
Yeah, and I've seen that a lot this year. Even just the state of Tennessee, I have a couple of clients who received grants from the state, and we put it as like other, like an other source of income, and then labeled it grant. You know what I mean? So it's clear what's taxable, what's not, where it came from.
Absolutely. When in doubt, because some of these grants are treated maybe differently, it's good to call it out separately, right? On your P&L. If you've gotten grants, anything, I would just have a separate statement, and then your tax preparer will see that separately and make sure that they are paying attention to taxable or non-taxable and recording it correctly in your tax return. If it's all muddled together in some kind of like income account, you're probably going to end up getting taxed on it, and you may not need to be. And the rules around that kind of vary depending on the types of grants that you're receiving. But in general, I would suggest calling it out separately. That's going to help.
Yeah, I totally agree.
Okay, keep going. Sorry, I derailed you on that.
So after that, you want to look at your personal funds. Is there anything from your personal money in your personal checking or savings account and your credit card that you paid for your business? We want to, what I normally will tell my clients is send me a little spreadsheet, and I'm going to journal that in to QuickBooks to make sure that we account as an owner contribution of your own money that you've put in towards your business. Okay, so make sure you do that too.
And I think on that point, I think a lot of people think that if they paid for it personally, like they can't get a business deduction for it, right? And that's not true, right? You want to do your best, always, always, always. Y'all know I harp on this, like separate business and personal, all of these things. But at the end of the year, when you're trying to figure out, okay, is there anything that I paid personally that really was a business expense? Or maybe sometimes it's like split expenses, right? And you may get to that too, Diana, but you want to pay attention to those things, and you can actually get them, like journal them into your QuickBooks, like Diana says. And if you don't know what that means to journal something in, that's why it's great to have a bookkeeper.
Yeah. Right? And if all else fails and you're like, okay, I have this money, I don't know what to journal is, I don't have a bookkeeper, spreadsheet with you to file your taxes to your CPA so that they know, and they'll help you and they'll take care of it for you.
Yes. And they'll probably charge you a bunch for that, but yes.
Yes. But all else fails, they will help you do it.
Yes.
Okay, so then once you're all done, you want to run an accounts receivable report, right? So who owes you money from 2020 or prior? And track it down and get the payment. For sure, if you can. And if you can't, then maybe you should be writing off some collectible debt there, right? So that's absolutely important.
Yep.
And on the flip side of that, run an accounts payable report. Who do you owe money to from 2020 or prior, and pay your bills, right? Don't leave those vendors outstanding. From there, like I mentioned, we're going to write off any bad debt, any client invoices that you say, this guy's a bum, he's not going to pay me. You want to write that off and count for any bad debt. And from that point, I've seen this in the group actually this week. People saying, do I actually have to count my inventory? You do. You need to count your inventory for 12/31/20. You need to know what you have on hand, and it should be reflected on your balance sheet. It's super important, and you can't get around it, guys. I'm sorry, but you have to know. You have to know the monetary value of what you're carrying over year to year. Okay, so get your counters ready. Get your people. Get counting your stuff, right? From there, we're going to look at payroll and sales tax. So we want to make sure that if you had any outstanding payroll, like payroll tax liabilities, we want to make sure that you've paid them. Number one, that you have nothing outstanding that you owe for 2020, and that what you paid and what you've recorded into QuickBooks or any other accounting software you use matches. So again, it's like a reconciliation process. We want to make sure it's the same. Okay. And you want to do the same thing with your sales tax. If you file sales tax monthly or quarterly, you want to make sure, again, that you don't have anything outstanding, even though your December payment will be due here the 20th of January or so. You want to take care of that. And if there's anything additional owed, pay it. And make sure, again, that it matches what's in your accounting software, what is in your sales tax portal with your state. Okay.
Yep. And I'm going to jump in and just answer this question real quick. It's all of your inventory. So that means raw materials that you have on hand. That means finished products. That's all your inventory.
Yeah. And the last bit here is you're going to record any applicable depreciation of company assets. So if you have a vehicle, machinery that you use, a really expensive computer, you can start to depreciate those on your balance sheet as well. And a bookkeeper or your accountant can help you do that if you're unsure. And again, you can always show up at your accountant's office with, I have this $40,000 truck that I bought in 2019, should I be depreciating it? And they will assist you to what the percentage is.
And sometimes, so that brings me to a question. So sometimes there are these kind of like adjustments like that. If you don't reflect them, in your books, but they are things that impact your taxes. I generally do recommend, and in some cases, depending on the type of business entity you are, I do recommend people actually do go back and reflect those in their books. So like depreciation and things like that, it is best to do that. That's something a lot of people miss, where they just don't do that second piece. They have their tax preparer adjusted on their tax return, but they don't necessarily make those changes within their books. I think it is definitely best to have your books reflect accurately your full financial picture, including things like depreciation, including maybe, some of those adjustments that your tax preparer may have made.
Which brings me to my final point, which is you want to make sure your balance sheet from 2019 matches your opening balance of 2020. And then again, after you file your taxes in 2020, we want to get a copy of that and make sure and make the reflecting entries in QuickBooks so that you're now adjusted 2021, right? Carries over. You always want to make sure. Usually it's your Schedule C that matches your balance sheet.
Yes, exactly. And I think that is something that is often an overlooked step, right? Is that reconciliation piece between your tax return and your books, because you might think, I get my books together, I hand them my tax person, now I'm done. Right. But there are some things that you should be doing on the back end to make sure that when you start again next year with this tax process, you start at a place where everything is reflected into your books, whether that's a Schedule C or you are doing, a 1065 or, your 1120S if you're an S Corp, right? Whatever it is, you probably want to make sure that all of that is getting reflected back into your book so that you don't have multiple different versions, right? You've got a tax version and you've got a accounting version, and sometimes that can make sense, but typically you want them to be aligned, and it's going to make it a lot easier to see what's going on in your business, right?
Absolutely.
So that's where I think we sometimes, I think that what happens, and some of you guys may have felt this before, right? The scramble at the end of the year. Oh, shoot, I had the best intentions. And then, somewhere around April, I stopped really doing much at all with my books. And now I have to scramble to get everything together for tax time. And those of you guys who have been around for a while know how I feel about that probably. Because if you're doing that, it's because you're looking at your responsibilities to keep books as a compliance exercise, as something you have to do for taxes, which you do. But Diana, is that the main reason that we keep our books?
Your numbers tell the story of your business. I was quoted on that in a podcast recently, actually, but they do, right? We aren't going through this exercise every month or every quarter or every year, depending on what you're doing, to just be compliant. We're doing it so we can make smart financial decisions in our business, which is what Jamie teaches over and over again. And it's really what we advise our clients on. We're able at any time, if your books are accurate and your finances are on track, then at any time we can take a live snapshot of what's going on and make informed decisions. Yeah. Do I have money to bring on an extra employee? Can I pay myself more this month? Should I increase my prices, right? All of these things are what the story, the numbers, right, that the story tells. So yeah. It's best to do this every month, absolutely. Not just once a year.
And I think sometimes people don't, they get their P&L and they're like, I don't even know, like they might run it and they're like, I don't even know what this means. And so because you are struggling to figure out the context and what to do with that and how to make strategic decisions based on it, you don't think it's important. You're like, what's the point in doing all this work and running it? I'm not really doing anything with the information anyway. So if that's where you're at, if you need your numbers put together, go to Diana. If you need to figure out then what to do with your numbers once you have them, come to me, because that's what I teach as well. And we've got, I'm going to do a little bit of a teaser because Diana's part of this as well. But next week, Financial Fitness Formula is being released. So Financial Fitness Formula, for those of you guys, a lot of you guys have probably heard of it. I haven't opened this program in a year. It's been since last January. It's my signature program. It is a 7-module, 9-week course that we go through together. And it teaches you how to make strategic decisions in your business and manage your cash wisely, right? So that's really what it does is figure out, how do I take my P&L? How do I take the information that I have and make decisions with it and really function as the CFO of my business? But I know a lot of people, it's tough to get to that point of looking forward and figuring out how to be strategic, right? When you're still stuck on cleaning up last year. And so that's where Diana comes in. So if any of you guys are kind of in that spot where you're interested in Financial Fitness Formula, but you feel like last year is kind of a mess and you might need a little bit of help, we have something for you. I'm not going to tell you yet, but I need you roundabout next week at this time to be paying attention to your email, because Diana and CubePros have an awesome opportunity that is part of Financial Fitness Formula that some of you guys might be interested in if you want both sides of the coin, right? Now, if you're just looking for cleanup, absolutely just reach out to Diana and CubePros or anybody on our preferred vendors list, because we have those people. We've vetted those people for you guys to make sure you get qualified people to help you. I am a big, huge believer in surrounding yourself with the right support team, right? Like having that A team. I'm stealing it from my friend Bree, but the A team around you, which includes, in my opinion, your bookkeeper. It also includes having a CPA that is doing your taxes for you and potentially even kind of getting strategic around your taxes. I really recommend that you guys have that. I think it will. Oftentimes, I think we spend too much time worrying about this stuff. If you're sitting kind of in that like bookkeeping is not something you enjoy, it's not something you're particularly proficient in, right? And yet you're still doing your own bookkeeping in your business, it might be time to let it go. Let it go, Elsa. I feel like I need some. I need some cue the background music. Where's my tech guy?
Right.
Really quickly before let's transition back, because I do want to mention, when do we need to get all of this done, Diana? What's the ideal time frame?
So you're not going to like it, but you guys, This year, this all needs to be completed by January 29th. Why? Because in order to distribute, if you need to distribute 1099s for your business, and W-2s essentially too, but the 1099s even more so, we need to have accurate financials to be able to accurately distribute someone a 1099. Who receives a 1099? Anyone who's not on payroll that has provided you with a service, like your social media manager that you just pay, Zelle or, PayPal or whatever. If you have an advertising service, generally your attorney, your bookkeeper, unless they're an S Corp, like CubePros is an S Corp, so we don't get one, but some of your bookkeepers are independent LLCs and they do get 1099s. Even, I always get this question every year. They're like, I have to 1099 my landlord? Yes, you do. If you paid rent, you send a 1099 to your landlord. So the threshold is if you paid this person over $600 in the calendar year, they get the 1099. So how are you going to know if you paid them that, if you paid them over that, if you didn't reconcile your books and close them, right? And you don't want to, they're going to be really pissed if you send them a 1099 for more money than you actually paid them. They might be a little bit happy if you sent them but for IRS purposes, we want to be accurate because we don't want you to get in trouble. Along with that comes the W-2s. And if you are running payroll on your own, you should be able to do and distribute W-2s pretty simply through your payroll software. And if not, and you have a payroll provider, they should do that for you. And at the end of the day, your CPA or your bookkeeper, I know me personally, we file all of our clients' 1099s, W-2s for them. So that's important. And that's why you've really got to get it together this month.
Yeah. And your
into 2021. Don't let this go lingering through March, 2020. Let's get rid of it. Move on, be fresh.
Get it done. I think that this is one of the things people wait on doing all of this stuff, and it just lingers, right? And they're still scrambling in April. You will be your tax preparer's best friend. And let me tell you guys, your tax preparers are going to be busy this year because we got PPP, we got EIDL, we got all these tax credits, we got a million things being thrown at them. So your tax preparers are going to be busy. They're probably going to have earlier deadlines to get everything in. So the quicker you guys can get this done and dusted and off your plate, the better, right? Who doesn't want to just get it done with? And that's where, some help can definitely come in handy if you're kind of in that space where this just feels like a lot, which I know is true for a lot of people. So we got a couple of questions here. So I'm going to jump in. So talking about the program. So for Financial Fitness Formula, my program that opens next week, it's only open for about a week, you guys. So don't sleep on this. If we did FFF last year, can we complete it again? We have lifetime access, right? Yes, Lauren, you are one of my founding members and you get to go through it all again. And it's been completely redesigned from last year. So it is all the modules are updated. We've got new PDFs, checklists, worksheets. Y'all know I love my worksheets. We've got all of those things. They are all brand new. We have redesigned and just really, you're going to freak out. You're going to freak out. You guys are all getting a chance to join with the new class. So all of my founding members from last January get to join in again and go through the program again with my new class. Watch your email around about the beginning of next week for more information on how to make sure that you get in, because I'm really excited to bring you guys back. Here's the wait list for you guys who want to join. Or you can just go to jamietrell.com/FFF as well. This is I'm closing down the waitlist. The waitlist does get special offers. So if you're at all interested in this, I want y'all to be on the waitlist. And especially I want you to be on the waitlist if you're interested in some bookkeeping help from Diana and CubePros. I'm not gonna give it away, but I just think you should, I don't think you're gonna be mad at yourself for joining the waitlist. So jamietrell.com/FFF or follow the long link, whichever one you feel like doing. Yes, it's gonna be awesome. And Dana, yay! Yes, Dana was one of my founding members as well. So all of y'all, I'm so excited to have all you guys back through the program and to hear your thoughts on it. Thank you. You guys are all so sweet. My founding members are all just showing up today. Yay.
Awesome.
You guys are great. Yay. Oh, Becky, you guys are so fantastic. You're making me feel the love this morning. Let's see. No, if you were in last year, if you were one of the founding members for Financial Fitness Formula, you don't have to join the waitlist again. You will be able to get right in. I can't see who this is, so I can't tell. Now, differently though, if you did Financial Fitness Basics, Financial Fitness Basics was the program that came out in June. That is a separate program. That's kind of the 101 of accounting, finance, and taxes. That's a fully self-study program. That is different from what we're talking about. This is my signature program. I haven't opened it in 12 months. So if you haven't known me for 12 months, you probably weren't in the program then. And so I want to make sure that you guys come and jump on the wait list. So because Financial Fitness Basics is kind of more the 101, it's education about your financial statements, about taxes, about different entity types. Financial Fitness Formula is really putting on that strategic hat about how to be the CFO of your own business and also how to have a plan, a personalized plan that goes back to your own goals on how to reach your financial goals in your business and your personal life and create that kind of cash management plan that is easy for you to stick to. So you can see what all the modules are listed on that waitlist page. So jamietrell.com/FFF. And you'll be able to see kind of if it's something that would be interesting to you. But it is different. It's a great complement to Financial Fitness Basics. But it is one where we have a class, we open and close the cart, and we will have one class that will go through it. I'm not going to be opening it again for a while. So make sure if you're at all interested in it, this is the time. It's the beginning of January 2021. And like I said, be on the lookout for a special offer by our friend here, Diana, which I'm super excited about. I think a lot of people are going to be excited about it. You guys, I love how many of my founding members are here. Hi, Charlotte. Yay. I'm so excited. Okay, so we have a couple of more questions. I'm going to go, and Lori, oh my gosh. Okay, I'm going to go and let's see, look through and just make sure we got all the questions on different bookkeeping things. Let's see. So the answer to this is no. So a lot of grants are taxable, actually. A lot of the CARES Act stuff is not. They specifically wrote it that way to not be taxable. And now we've had that change too, where now specifically with PPP, but also some of the other grant programs through the CARES Act that you can deduct expenses related to it. But a lot of other grants, like some of those local grants, unless otherwise specified, are very likely to be taxable. So you want to look and see what type of grant it is. And it may even include that kind of in the grant information, but I'm not sure. It just depends. So a lot of these like state grants and things like that may be taxable to you. So that's why I think it's just good also to leave it separate, right? Leave it separate on your P&L such that when you talk to your, tax person, you can tell them what it is because they'll be able to see it. And then they can hopefully help determine whether it's taxable or non-taxable to you. I really think you guys, it's so important this year to have a support team to help you through this. Okay, let me go back and just make sure there are not any more questions. All my awesome founding members. Let's see. Oh, I like this question. I'm going to turn this question over to you, Diana. I use a CPA for taxes, but I'm the bookkeeper. Not good. I mean, that we all start out that way. We all start out that way. But if you've been in business for a little while and have people usually ask me, when should I have a bookkeeper? Unless you love it, anyone, unless you love it, as soon as you have reliable revenue, I would say, and as soon as your time, if your time would be better served, right? Think about, okay, the time I'm spending or maybe not spending, right, on this, could this be better served in sales in my business, doing something that is actually going to grow my business versus these sort of more administrative tasks that somebody else can do for you and can do better, right? So that's where I think it is usually a good time. But so you're switching from Excel to QuickBooks. Awesome, fantastic. What's the best way to get started? What would you say for that, Diana?
So you are at the perfect time of year to get started. Now, Jamie has a link. She has a link to QuickBooks, which gives you like, I think you have like a 12-month discount or something, right?
Yep, special
And
discount.
use her link, sign up, take advantage of the discount. QuickBooks Online is awesome. It's pretty self-explanatory and user-friendly. And what you can do is when you subscribe, what you're going to do is you're going to go right in and say, oh, I have Chase Bank. You're going to select it. You're going to hook right in your bank account and start downloading your transactions from January 1st, 2021. Since it's only, what is today, the 7th, the 6th? It's the perfect time of year. So if you're going to do it, now's the time, because then you won't have all this backlog of work and transactions to bring in 3 months or so into the year. You've only got 6 days, right? And maybe your business didn't really even start until Monday. So it's like 3 days. So, use Jamie's link, sign up to QuickBooks, download your transactions. If you are still in like a DIY and you are not ready for a bookkeeper, there are a ton of tutorials all over YouTube on how to break QuickBooks Online. And QuickBooks even offers like a small sort of, module that's free that you can also use to sort of learn where everything is.
Yes, and I'll say this, because I think this is a good time, Janine, to mention this. So I have a link, and I've shared it in there. It's jamietroll.com/QuickBooks. If you want to DIY and you're pretty sure that you're going to stay DIYing for a while, right? If you're just decided you don't want to do a bookkeeper, then you can sign up for that. You can't get that deal anywhere else. It's 12 months for 50% off. I have a special deal negotiated with them, and you get a free trial. So usually it's one or the other. You either get a discount or a free trial. You get both. You just have to make sure that by the end of your 30-day trial, you have your credit card on file. Otherwise, it gets rid of the discount. So that's just something procedural that people have run into. That's great if you are DIY. If you think, though, I'll give it, if you think you're on the verge of taking the plunge to get a bookkeeper, do it now. And the reason I say that is because bookkeepers, typically, if you're getting a QuickBooks Pro Advisor, they have special rates negotiated that they may be able to also pass on to you. And if you already have QuickBooks, they can't give you those rates.
Right.
So, so that's something just to keep in mind if you are kind of in that spot, that a Pro Advisor can give you special rates.
A wholesale, that we have a wholesale discount that we can apply and set up the account for you, and you don't have to even touch it. You just make the call, hire your bookkeeper, and offload.
Absolutely. Exactly. And I do agree, going back to just January 1 of 2021, this is a great time to switch. If you've been doing kind of an Excel offline thing for a while and you know that you need to get something changed, just go back to January and don't go import the last 6 months of stuff. That's not going to be helpful. Do that, kind of limp your way through 2020 and get it together. Don't try to go back into QuickBooks and do that. I don't think that's a great exercise in anyone's time. But start it fresh January 21. And I'm also going to mention, just because we're talking about starting fresh and what to do, for those of you who guys need a business bank account, if you don't have one yet, or you're looking for one, you don't like the one that you have, I also recommend Aslo. I'm going to put that link in here too. So jamietroll.com/Aslo. It's free. Free. Business banking is hard to find free. There are no minimums. It's online only. So if you need someplace to deposit cash, it's probably not the right answer for you. But if you don't, it's what I use and I love it. And you can set one up in like lickety split. And then what you would do is take your Aslo account, right? And you don't put your personal accounts into QuickBooks. Don't do it. Don't do it, right? Get your Aslo account set up, and then you can get your QuickBooks account, and you can plumb them and just make sure everything's going through your business bank account. So for those who need that, hang on, I'm gonna put that up here too. I just think that the new year is a great time to start all of this process fresh, right? Like we are right at the time. Get an Aslo account, get QuickBooks if you don't have one, make sure everything is kind of separated out from the beginning of the year. It will make your life so much easier come tax time next year. Okay, let's see. Ooh, I like this question too. And I can't tell who it is. So if you guys want to give StreamYard your permission to see your name, it's up above. What's the biggest difference between CPA duties and a bookkeeper? Diana, give us the lowdown, because I think sometimes this is one of those things that gets confusing, especially because different people offer different things, but tell us your thoughts on this.
So for my company personally, your bookkeeper should be able to do everything except file your taxes or do tax planning or, anything that is specifically involved with taxes. Your bookkeeper should be able to categorize your income and expenses, pay your bills, invoice people, administer your payroll, file and pay your sales tax, financial reporting, monthly, quarterly. Also, they can sometimes serve as some sort of like virtual CFO, depending on their skill set. Your CPA is who actually takes the work the bookkeeper did all year, files the taxes for you. They help you with tax planning, tax credits, etc. They're the tax wizards. Your bookkeepers are your worker bees all year.
And I will say, so I'll say this, because there are some companies that do both things. So some bigger companies may do bookkeeping and they may do taxes. I know some people like that one-stop shop. I don't always recommend it unless they have people that specialize in both, because you paying a CPA to do your bookkeeping probably doesn't make a whole heck of a lot of sense. You're probably going to pay more for it as well, right? And vice versa. If somebody says that they're great in all of those things, you want to kind of really dig into what they do. I actually think it's really good, and that's why we have our preferred vendors. All of our I can't speak. Too much coffee. Preferred vendors know each other, right? So the great thing about that is it is more important, I think, that there's familiarity there. I think that helps versus having a CPA and a bookkeeper that are completely on different pages. If they're people that know each other, they can more easily work together if needed, right? And you don't always need a lot of communication, but sometimes that can be helpful. So that's why if you're looking for a bookkeeper and a CPA, my preferred vendors list, everybody knows each other. We all get along. We're a little happy family.
It's good to checks and balances, because sometimes, the CPA comes in and says, why did you? And then I can explain, or vice versa. And I'll go, well, do you think that? And it's nice to have two on your team, and it's nice that they're not under the same roof. I 100% agree.
Yes,
and the bookkeeper should work very nicely with your CPA, as your CPA should work very nicely with your bookkeeper. Their relationship, it shouldn't be like a weird thing, like, oh, is it okay? No, everybody should get along. Everyone's working for you. So if you don't have that kind of relationship going, then you're working with the wrong people.
Yes, I agree with that entirely. People are asking about which QuickBooks version. So it depends. The one thing I'll say here, and I actually have, if any of my team is watching and wants to drop my video from YouTube that I did on which QuickBooks version is right for you, that would be great. I can't grab it right here, but I have a YouTube video. If you go over to my YouTube channel, you're watching me on YouTube, Marilyn, so you should be able to find it. It's a short video on kind of the differences between the different levels and which one is the best one for you. The one thing I will tell you is and I'm sure Diana would probably say the same thing. Do you know what I'm going to say? Which one I don't recommend, Diana?
Yes.
Yeah. So don't do QuickBooks Self-Employed.
Or self-employed,
either of them, right? But I think QuickBooks Desktop for sure. Desktop is a totally, and that one you won't see on my link. I wouldn't do Desktop because Desktop is, it's kind of going some people love it. And if you love it, stick with it. You don't have to change. I'm not going to make you change if you're on Desktop and you love it, right? I just don't think now, if you're starting QuickBooks in 2020, it makes sense to start on Desktop because we're moving the way of the cloud. You have access on your phone. It's real time. You can get it with your bookkeeper, your CPA. We don't have version control issues. Everything is plumbed together. We have a million apps that can go and work together that you may already be using. There's a million reasons. So don't do Desktop in 2020. If you're on it, don't get mad at me and you love it, keep it. You can have it. But self-employed is also another one that a lot of people think they want to start with self-employed because they're not sure what they need. But when you start with self-employed, right, you can't upgrade easily into one of the other ones. So self-employed is a totally different platform than QuickBooks Online. So if you're not sure what you need, take a look. They have a little comparison chart. So if there's certain things, if you have inventory, you may need a higher version. But I would even you can start with Essentials, right? Or Simple Start. like one of the lower ones. And if you find you need more functionality, you can always upgrade. So I think that's a completely fine way to do it, especially if you're starting out. Start with the lower one. Just don't start with self-employed because of that issue that when you outgrow self-employed, and you will, right? Unless you are like a 1099 contractor, maybe then you won't. Maybe if you have a very simple, if you're a gig worker or something like that, self-employed, great. In most other cases, you want to go with at least simple start. All right. Okay, well, I'm just gonna do a real quick, okay, here's the QuickBooks version video. It's a little bit, that's a long, I'll give you guys a minute to find it. But if you're watching me on Facebook, you should be able to see this in here. So that's the video where I go over the different versions of QuickBooks. Let's see. It's okay. It's okay. It's totally okay, especially if you haven't done that much of it yet. Let's see. That's funny. It's okay. It just is a very, very basic functionality that really only works for certain types of business models that are extremely simple, right? Like extremely, extremely simple. Otherwise, I want you to do the higher versions. Okay, so I think we got to most of them. If we missed your question, I am sorry. I'm trying to keep up with all the comments that are rolling through. Oh, I'm just going to get to this one really quickly.
Yeah.
So she's asking which she has 3 businesses. Do I need a different account for each in QuickBooks?
Yes.
Yes, you do.
You
but
do.
Sometimes they have bundled discounts. So I think if you get 3 or more, is that still the case? If there's 3 or more, sometimes they can do a bundle discount for you. You might have to reach out to QuickBooks directly, or your bookkeeper may be able to do that if you're having a bookkeeper kind of set it all up for you. But yes, you do need a separate one. If they are 3 separate businesses, right? Now, if you have one business and you file one Schedule C, but you have 3 different kind of streams of revenue within that business, you can put it all in one. And I would just get a version of QuickBooks. I think Plus has class tracking. Get one that includes class tracking, because class tracking allows you to look at different kind of streams of revenue and see what your business performance is on each. So you can kind of categorize it out. But otherwise, if they're actual separate businesses and you file separately for all of them, maybe separate Schedule Cs, or you have one's an S Corp and one's a, Schedule C, whatever it is, yes, you would need to have separate QuickBooks files for those. Okay. All right, guys. So we've gone 47 minutes now. So thank you, Diana, for joining us. A reminder again to get on the wait list for Financial Fitness Formula, jamietroll.com/FFF, and be on the lookout because the special deal I have with Diana is going to go like super quick. So I want to make sure you guys are aware when it comes out. Be watching your email around mid next week so that you guys can jump on that if you're looking for the strategic side of things, the cash management, creating a plan for yourself for 2021, but you also need help getting cleaned up for last year. You're going to want to pay attention to that. Otherwise, if you're just looking for help, help me, I need help with 2020, reach out to Diana, reach out to our preferred vendors for sure. Also, we've got CPAs on there if you're looking for someone to do your taxes. The preferred vendors list should be linked wherever you're watching this, somewhere. Find it. It's there. Anyway, you guys are awesome. Thank you, Diana, for joining us. It's always
Thank you for having me.
Bye.
Bye, guys.
Bye, guys.